What's up, guys? I'm Devin. I'm just on my back porch having a little bit of back porch time. I recently read this book. It's called Angel Customers and Demon Customers. It's by Larry Seldon and Geoffrey Colvin. I really didn't know what to expect when I first picked this book. I originally thought that it might have been customers in a situation where they had to make a moral decision and they would have an angel or a demon on their shoulders, whether they're going to steal merchandise or whatever. I don't really know what I was thinking, but it ended up being completely different, and it was equally as interesting. It really talks about publicly traded companies and how they look at profitability and things of that nature. I really feel like it would be a great book for somebody who's either starting a publicly traded company and looking to have a strategy throughout that process, or even say a company's already been established and they're trying to remake their image. I really do feel like this would be a great book and it'd be very beneficial. It has some dull areas, but overall it is very interesting, and if you make it through the dull areas, you come out knowing even more. But anyways, what this book does is it helps companies understand customer profitability, and it develops improvements that can create a more profitable business. The idea really is to take a new view on your ultimate value and success, which is, or your ultimate source of value and success, which is your customer. With this book, companies like big companies such as Fidelity, Dell Computer, excuse me, sorry, I had to get resituated. But anyways, with this book, companies such as, big companies such as Fidelity Investments, Dell Computer, Best Buy, and a few others found that only 20% of their customers made up for their entire market capitalization. These 20% of the customers are known as the company's angel customers. They're known as the angel customers because they help the company's stock. On the other end of the spectrum, you have the demon customers, and really the demon customers, pretty obvious. It's not because they're bad people or anything like that, but they're just unprofitable because companies don't really know who they are, or in return they fail, they fail to offer them the correct value proposition. This really shows that treating all your your customers equally really isn't a great idea for companies that use stock price as their profitability measurement. The book really had three main important principles that I want to go over. It went into a greater depth in the book. I really don't want to say too much because I want you to get something out of it if you were to read it, which I want you all to read it because it's a great book. But anyways, the first important principle is you can't think of your company as a group of products or services or functions or territories, but instead as a portfolio of customers. Basically what this means is you use a premium price-earnings ratio multiple as your measure of success or profitability. The second important principle is that every company's portfolio of customers can and must be managed to produce superior returns for share owners. So really what that means is all your strategies need to be focused with the share owner's growth in mind. Basically, if you have a good return for your share owners, it attracts good employees, because good employees want to work for companies that are profitable. And if your employees are good and they're happy, then you're going to be attracting happy customers, and happy customers really is just more advertising through word of mouth. It also helps with reputation. Reputation is really harder to create than it is to maintain. So if you were to implement a customer-centric strategy, it'd be a lot easier and cheaper to maintain that strategy than it would be to completely overhaul and start from scratch, just because it's more expensive and harder to change people's opinions of you. That doesn't mean that this book can't help those people, because I promise you it can. This book is amazing. But also it helps if you have a good return for your share owners. It helps with your buyout bargaining power. For example, Apple, if they wanted to buy a technology company that produces like a chip in the iPhone or iPad, then they might be able to offer shares in the company or stocks to the company that they're trying to buy out. And if you have a good return on your shares, then it's going to be a lot easier to use that as a bargaining chip than it would be if you had a poor return. Because if you have a poor return, it just looks like you're poorly run, really. And all of that really focuses around this idea of value proposition management. And really, it's what that is it creates and sustains a premium price to earnings ratio by using customer data to deliver improved value propositions. So basically, you're creating and sustaining this price to earnings ratio, which is your returns for your shareholders. And by doing that, you're able to improve your value propositions and hopefully meet more of the right customers, of your angel customers. The third important strategy or point is that companies enhance customer profitability, and they really drive their stock by creating, communicating, and executing competitively dominant customer value propositions. And with that, it encourages companies to offer services and intellectual property on which profit margins are almost always a lot higher than those of products. The return on the invested capital is very high because there's little investment capital needed. What the book says that companies must use a premium price earnings multiple as the measure of success. Think about the process in terms of the value proposition management. Like I said, you create an organization and a culture where managers what you do is you create an organization and culture where managers are accountable for realizing the potential of customer knowledge. So basically, you're putting all this information together about your customers, and you know who your angel customers are, your demon customers are, and anywhere in between, and what you need to do to offer the correct value proposition. Really, that's the three main points in a nutshell. If I really don't know what else to say. It was an eye-opening book. I never really thought about publicly traded companies and how they would look at profitability from a return on their market capitalization or shares. But with this book, you really you have never read a book about customers like this one. It has the potential to radically transform your business, to improve your profitability and your shares dramatically. You don't have to do layoffs or restructurings. You already know what you need to know, or you can easily learn it. All you need to do is just learn how to use it, and you could be the next person to maximize the benefits of this book. I guess that's all I got for you guys. I hope I wasn't too boring. I hope I didn't stutter or say or too much. But yeah, this is Angel Customers and Demon Customers. I highly recommend it. If you cannot find a copy in the library, this copy is actually Dr. Merriman's, and I'm sure she would love to let you borrow it. Alright guys, see you all in class.